right here, Diamond Live reversal with MMT. Time it hit 7:06 a.m. Pacific Standard Time. What we're looking at is that reversal and breaking those lows to 555.83 off of that top end of that short called price exhaustion ratio reversal, MMT. And once again, getting these wholesale over here, they were 28.50 on the close, and we stole the bids down here on the lows. They'll work their way up. That's that price level of support on that first initial 30-minute low at 555.83 on that low. And now take a look at the close, 552 minus 553, 555.83. Now, minus that out, and that, see how your gap diminished? And as the gap diminishes, it gets weaker. And let's take a look at that bid and that ask, and these, they hit 635, 730. There's that dollar up rule, Maryland. There's that dollar up rule. Now, as I said, if you break these lows, that would take the leverage up into 2650. Put would go higher in that bid and ask. There it is, 960 by 1030. I had bids out there. I was a Houdini markdown artist that got that low end. You can see there was big amounts of contracts being purchased right over here. Look at those. Those are making money at $8.30. You dump them for $1. What's wrong with that? Nothing. There's nothing wrong with it, folks. It's how you can see how they stole the money from the public at $14.70 after marking them down $10 yesterday, and then they mark them down here to that wholesale market area, and that's where you get made. And that's how that volume, and that's how that money is made. And that's how in the last print at $9.80. And I gave these market orders out in pre-market. And that's about stealing that bid. And that's about this thing having that reversal live here and now on that opening bell. And once again, price exhaustion and bull rallies will have pullbacks, MMTs. The nice thing is the mathematical pricing scripts that we have are very accurate. And what does it do? It monitors the heartbeat. It monitors that heartbeat of where those names are and how they're going to have support levels and how they're going to have diamond pops, like right here. That's that delta line. And here's that half bar. There's that reversal on that opening bell. You put it in right here, 558.36 on the high, 555.75 on that open. That's that low. But that 557, that's a $2 difference, a little bit more right there on that open at 557.54. And look at here, 555.75 is that low. He's got that dollar up ratio right here running into that resistance bar. The nice thing about the ratio mathematical format between the buyer and the seller is it doesn't lie. And as I said, when you go down here in the current trend ratio below 1.00 and you go, the lower that you go, 0.75, that's 3/4 delta support. That was 12 teeny support level at $3.75 support level on that low support level. Once again, the art of understanding that high end of that price exhaustion, you sell it short and you buy into cover, and then you get net long and you bid pop that thing off that bottom when that seller is out of the way, and you can see the script, 1 teeny, 2 teeny, 3 teeny script at 31 pennies. So that's going to equal 93 pennies in this bid and ask. And how many lows that we've made? 89 lows, and today 29 highs. That was that super gap, $6.36 to the swing high short. To, you know, how do I cover and what am I looking for at each and every half minute, 3-minute bar? And you can clearly see that he's printing down here toward the lower end in that bid and ask. Here it is. Now they're bid popping right there at this diamond. So what I would tell MMTs is that getting net long off of that support level in the short term with the equity at that half bar is the right thing to do on the intraday entry long. And then just taking those spreads, those 3 teeny ranges at 93-cent movements. So let's say you're getting 85 pennies per 3-minute bar. You're not doing bad in the buy and sell ratio for what it's given there on the opening bell. Once again, um, we're doing a special on gap reversals and what they were 558 36 to 555.75 and that opening bar. Notice that the opening bar at 557.54 to 558.36, notice that the dollar ratio was diminished from here to here. Okay? It wasn't, like you went up to the 560 strike price because you didn't. And once again, price exhaustions are what they are. Yes, it's a great company, but remember, there's two sides to every market, and you want to get your fair share of the bounces from support levels, but then those resistance levels short. Here and now, Apple, here and now, here and now. That's that low. He's got that ratio low in MMT. It's in the market. That intraday high is back above 25. He's holding half bar. Let's take a look at that teeny reversal right here in that video. You can see that teeny reversal right here in that bid and that ask. Now, let's see how he sets it up here. Here we go right now in that 421 560 put. Look at that big block Chevrolet or whatever you like, 115. Here, 221 at 2085. They're buying huge right now. Look at that, 115. Look at that, 2070 by 2085. He's brought it down there. They marked it down from 2850, 2710 on the intraday high. Right now, we're 2 minutes from that hourly opening bell right here at SMF with MMTs looking for price reversals. We have a slew of reversals earlier. We made a $2 bounce off of that bottom level almost, and that ratio off of that long debit in there. So these are the amount of contracts. I just want to get the record right here that's being purchased. There's another 7,700 of the 555 put right now in less than an hour that's been bought on Apple. That is extremely high volume put side contract. It means that more people are probably watching who? That master at that wholesale bid. I still haven't. Here we come on that 620. I got a 650 by 655 on that 560. So once again, welcome to price the high, that low bounce, $2 and selling into Apple right now is what I'm telling people to do because that's how you sell into the strength. You have to know how to exit your long positions. And once again, when you're up here at the high, you're limiting out into the resistance level and ringing that cash register from the lower entry level over here in the script. So as it goes up 5 teenies, you're selling into the 5 teeny movement. Who cares if it wants to go a little bit higher or not? You need to learn how to exit the trade. Once again, you've been given a gift on how to steal the bid and trade using this reversals, breakouts, intraday highs, lows, money flows, you name it, and where the majority of the crowd is going to get so overbought and so overbought levels. There is huge put contracts being bought into the upside movement. It's a bull move, but you have to know how to sell into the bull. You have to know how to sell into that bull gap because before any major pullback does happen, and it's not because a company is bad or anything like that, it's just because that the bull cycle will eventually, as it's trying to show itself, get some point of exhaustion high. And I'm going to come over here on that 620 bid. Why I'm breaking back up here and I'm not a dollar below that ratio high, that's that. I'm above it here in the bid and the ask. I'm going to drop this 620 bid right here on that 560 and I'm going to peg it right back at $5.80 right here on this 560 put. That's where I'm putting my bid on this one. And that's going to be intraday, and that's going to be based on us breaking that high in this 3-minute bar right here that's live in that video. Now, yes, I gave a 580 bid, sir. So we're there, and it's live, and you can see it. You can see if it's going to break that high ratio. Okay, there's that money flows. And you're going to watch the price exhaustion come back up to the intraday high. Remember, you've been open exactly 31 minutes on the opening bell, Mike. So part of that hourly trade, which is the latest bar, the hourly 15-minute bar, is where you're seeing all of this money come in and chasing the name. Do you see it? But at what level will they chase it to where it reverses again and goes back and breaks these lows again? So we're watching over here. I put this at 580. I thought it was very crafty of me to do so. You hear me? Well, don't you believe I did the right deal? Yeah, I no, from 620 I canceled my bid because the stock was too close to breaking the high. So, yeah, I adjusted it, right. But it could and they reversed the equity. See how they sold into the diamond? So, watch the high. We didn't break it. We only 29 highs still. And I canceled, yes, 580, sir. Hold on, I'll be right back. I gotta go on the line. Watch that breakout, Brian playing. Watch and see if they reverse that high and snap it down there at the bottom if you think you got it. That's a 625 with a 1680. That's a $10 markdown. Go buy one. Create a market at 640 to 15-cent premium. Do it now based on that lower bid if he crosses the market. There, he took you on one. So that way you can say that you bought the $4.15 markdown as he just did. I've been given a gift. Now you're going to watch. Keep those lower bids, though. The only reason why I let you do that, only reason why, is because he started to cross these bids. And you're looking for flash trades, Jazz. And a flash trade would be selling down below the market down here. Or a flash trade to the upside is buying the ask and letting that thing rip higher. And there it is right here. Here's the brain. You're at 85, 88 on that breakout. 85, 88 on that breakout. That's how they break them. That's how they break them higher. Is he going to break that high? I'm out here at 580 now. I'm still not yet because you haven't broke the highs. You hear me? If you're going to do that, you'd have to limit those out at 630. You hear me? And they're there just to keep your tight. You only had one contract, right? So you didn't break the high. You did not break the high, sir. You're live on this video. You did not break the high in that. So I want you to know that you did stay below it, just so you know where you're at in that bid and ask relative to that high as we're shooting through there. Now, put your contracts down at, let's get below the market, at $5.80 now. All right, we're still at 580. That's confirmed. Once again, knowing how to sell into the highs. There. All right. All right. Let it flash. It's at 100 right now. Let it flash. Look at that intraday high. Went to 39 from 29. 39 highs. Let it flash. 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 There it goes. 595, 580 is going to come into play. Once again, I'm Houdini at that level. Making a market. I know how to make a market in that bid and ask. That 595 is that low, 605 by 610. That's on that. That's on that 560. That's on that 560. And you had 47 highs on that last movement. And it all happened right around the hourly opening bell, 15 minutes after that. And that's how you got there. And that's where you finally hit my lower end over here. It's 6 by 610. It can still run right now and just keep breaking these highs as it's doing in the ask live. And they will cancel the 580, cancel the 580, give me 540, give me 540, 540 bids. We got the 595. We didn't break it. It's live. That's 585. Once again, they were 1680, and I'm going to buy that markdown. I'm going to get that markdown. There it is, 585. We canceled the 580. We went down to 540. It's live. It's here. It's now. It's all about 7:36 a.m. Pacific Standard Time, 3/13/2012. Remember, MMT, it's all about being the master of stealing that lower end of that bid and selling it back to the public at a higher price. That's what it's about. We continue to break higher in all the indexes. I'm going to give new orders. That one trade is like over with on that 2650 put. The next limit orders down below the market's going to be about 5.70, selling back at 770. That's the next lower end on that 2650 put on the NASDAQ 100 when it puts in its, okay, I got a reversal live. I've got the low of 580. See how I hit that, Jazz, right to the penny? Even though I put Brian Plain below at 540, there's that low. No one else is there, but I've got other people buying, not just people here. Do you see it? Well, that's the gift, sir. Before the fact, not after the fact, right? So I've got lower bids at 540 in the channel, though, that I kept him at. And right now, you exhausted the. Remember, I gave a short order out at 1.5 delta in pre-market, and that was 559.50. That was the sell short. We got the 48 pennies from it, Jazz, right there, 559.02. So yeah, we're holding that lower end of that. I got that lower end of that bid. I got it priced. Hey, this is the gift. All right, you have that delta short out there at 559.50 minus 3 pennies is 559.47. I gave that out in pre-market. It is right now 1 hour and 15 minutes opening bell, 7:45 a.m. Pacific Standard Time. Today's date 3/13/2012. Taking that ratio high right up to that 1.5 delta, 1.5 delta. 1.5 delta alert on that high end. We have bids over here at 540. We've been having those out all day on that side of the market. I got a 550 low on that print. That's on that 560. I got a 550 low on this big breakout. We broke them delta highs. Here you go. Super inflated at 559.6, slightly above 1.5 delta. Look at that all-time high that happened at 7:53 a.m. Pacific Standard Time, 3/13/2012. I repeat the time. The time is 7:53 a.m. Pacific Standard Time. Hitting that upper end of that, right below that 560 strike. They took these right down here to 549, and we're making a market. There's that reversal. The intraday highs, 109 highs and 89 lows in this time frame. Congratulations to the upside of that move, to the finally getting up to the 1.5 delta. That's how you let those long sides run up there and then buy the short side of the market down here. We're going to hit that wholesale bid. That's going to be the next transaction, is buying this deflated premium, deflated premium, deflated premium, and selling the inflated call premium and getting out of the call side once and for all. It's time to pull the plug. Sell, ring-a-ding, 559.60. I got that all-time high, 7:54 a.m. and still climbing. And once again, that wholesale bid over here, 7,300 put contracts traded there, 7,100 of the 560 puts that people are getting involved in April, 1973, 2710 is a high, 2850 was a close. Once again, there is 11,433. There's a lot of put option buyers and sellers moving in, but no, buyers are moving big on this up move as Apple continues to make a series of all-time 52-week highs. You can see that big put side of that option market. Look at that volume. 11,400. Look at this volume. 7,400. Look at this volume. 7,200. These are just on the various strike prices where these put buyers are moving in on big amounts. And we're going. Here we go. We got that high end. We got an MMT short up there toward the higher end of that delta range. It finally has that dollar reversal. Here it is right now, 8:06. We have 1 hour, 36 minutes of that opening bell between the bulls and the bears, and you can see them just pumping that to all-time highs with that dollar reversal. Ka-ching, ching, ching, ching. That's how you trade that reversal. Here we are with the Apple. We had successful trades on this. I'm going to conclude it once again, making that all-time delta expansion high and taking both bid popping. How far they go, no one ever knows. But making a market between the public buyer and seller, we do know.